Right, hello everyone, welcome back. Well, I said we were going to have a look at how some of this might be examined today. So I'm going to look at a couple of papers. So I've put the paper that we're going to look at first into the chat there. So it's the September 18 question 1 we're looking at. So September 18. So the paper is in the chat. And it looks like this. Okay, and this one is banana and grape. First thing you always want to do in these papers is, and I know you'll be in the computer system, but it's going to be similar, except there'll be exhibits, but you want to look at the requirement. Okay, so what sort of thing are we looking at? So I'm going to start with the first bit of this. So draft an explanatory note to the directors of Banana discussing the following. How goodwill should have been calculated on the acquisition of grape, and show the accounting entry which is required to amend the financial director's error. So it's around goodwill, and we need to think about how to fix whatever problems they've got with the goodwill here. And this is particularly around the acquisition of grape. So we'll need to find that. Okay, so all of this relates to grape, which is this one. So this is the acquisition of grape here. And actually we've got a pro forma. So let me do these side by side while we're doing this. Okay, so September 18, question 1. So we've got a bit of help here. So we've got Banana purchasing grape. So pretty much, let me see if I don't think you need anything much other than the first bit here. So what I'm showing here, I think we can do this with all of this. Okay, so we have a little bit of information. So what I'm going to do is I'm going to give you a little bit of time. I want you to read through all the information that you're given. So that's going to take a few minutes. And then I just want you to work on the first bit. Okay, so I want you to get me, while you're reading through, the details for the working one. So what's the year end? What's the acquisition date? What's the parent percentage? What's the NCI percentage? And what is the consideration paid? Okay, so pretty much these bits here. Okay, I'm going to give you about 3 or 4 minutes. In fact, I'll give you more because you do need to read through all that information just to get an idea of what they're telling us. But we already know that we have to correct the goodwill. So they've obviously done this in the acquisition, but they haven't calculated the goodwill correctly. So you'll need to think about that as you go through. Right, okay, I'll put a little timer up, have a read through, jot in the things that we've mentioned there, and then I'll come back and we will discuss together. If you have any problems or you can't get the paper or anything like that, pop it in the chat, and I can maybe email it or something like that. But other than that, have a go. Right, okay, let's have a look. So what we've got to do here is read it carefully, set out all the bits that we need, and then think about what the incorrect treatment has been. So key bits here, we need the year-end date. So we are working up to the 30th of June 20x7. The acquisition date, now we're looking at grape here. So this is 1st of January 20x7. Parent percentage, we acquired 80%, which means we've got an NCI of 20%. And I said to do the consideration paid. So once you've done your read through, you're thinking, right, okay, what consideration have I got here? Well, we've got purchase consideration comprising 10 million shares, which had a nominal value of 1 each and a market price of 680. Well, it's the market price we're interested in. So if we pay shares, we're looking for 10 million times $6.80. So that's 68. And we've got the contingent consideration. So the contingent consideration, well, we're told that an 18 million amount, if the net profit grew by 5%, the present value was 16 million. And there's a 25% chance that we would pay it. Well, we know there would have to be the present value because it doesn't matter what you're actually going to pay, it would need to be discounted. And we know it needs to be probability weighted. So 25% chance of that. So this is going to be 16 million times 25%, which is 4, which means the total consideration is going to be 72 million. Okay, now looking at their calculation, it's incorrect because they haven't included the contingent consideration. So part of our adjustment to fix that is going to be to bring in the contingent consideration. Okay. Does that make sense to everyone? Does everyone see where I've got that? Is everyone happy with how I've done it? Give me a green tick or a thumbs up, or give me a question to check it. Okay. Now, the next thing we need to do then is the correct goodwill calculation. We've already worked out the consideration paid, 72. Fair value of the net assets. Well, we need to be careful because they give us a little bit of detail, which means that we might need to make an adjustment to the net assets, or sorry, to the to the net assets, and we need to think about the value of the NCI at the acquisition date. They do give us a little bit of detail down here at the bottom. So, well, let's do this bit by bit. So let's take, no, actually we can't because it's proportional, right? Okay, so let's start with the net assets at acquisition. So that line in theirs, they have 70, but they tell us here that the only adjustment required is for this fair value of land, which is 5 million in the higher amount. Okay, read that through. Give you 30 seconds, pop in what you think is going to be the fair value of the net assets at acquisition. So this line here. So just put your amount onto your spreadsheet. I'll give you 30 seconds. Okay, so what you should have here is they have not included this adjustment to land, fair value higher by 5 million. Well, we know it needs to come in at fair value, so we need to increase the 70. So it's going to be 70 plus the 5 to increase it by that amount, which is going to be 75. Okay. Now, the last bit then for this is I want you to have a go and read this bit at the bottom and see if you can get me the value of the NCI at acquisition. It's a bit more tricky, so have a read see what you think, see what you put in there. I'll give you a couple of minutes. Right, okay, so what does it say here? It says that they have incorrectly used the proportional method in here. So they have taken 20% of the net assets, when actually it's their policy to use the fair value. Fair value is number of NCI shares times the share price. To get the number of NCI shares, we need to take the share capital, so $1 shares, 20 million. We need to multiply that by the NCI percentage. 20 times NCI percentage is 20%. So that's the number of NCI shares we have times the share price, $4.25. When we do all of that, equals 20 times 0.2 times 4.25, we get 17, which means that the goodwill on the acquisition date is going to be 14. Okay, so is everybody happy with working 2 there? So give me a thumbs up or a green tick if you're happy with those figures, you're happy with where I got them. Even if you didn't quite get it, you see now. Give me a question if you want to check it, or there's something that's not quite sitting right with you. Right, okay, so that's the correct goodwill calculation. They had done it incorrectly. So the goodwill calculation that they had done is here, and it had various mistakes in it, which we need to fix. We need to fix the consideration, we need to fix the NCI, and we need to fix the net assets. So I have got your journal entries here, debits and credits. So you need to adjust the contingent amount, the NCI, and the fair value of the land. It's not too difficult because it's all affecting goodwill. So you'd think one of the entries is going to have to go to goodwill each time, but I'm going to give you a few minutes. See if you can work out what the debits and credits will be here to make those adjustments. Okay, give you a couple of minutes. Right, okay, so let's look at these. So first one, adjustment to the consideration. So they hadn't included this contingent consideration, which is 4. So what's that going to do? It's going to increase the goodwill. So we're going to debit the goodwill with 4. We're going to credit something with 4, but what's it going to be? Well, it's going to be a liability. It's a provision, basically. Okay, so the contingent amount is a liability. It may or may not be paid. But remember, what we do is then it's adjusted as you go through the years. So it's 4 now. If it became more likely, let's say it was 50% likely, well, then you'd need to adjust it up. Or if it became less likely, you'd adjust it down. Okay, is everyone happy with that entry? So let's just check them as we go. So give me a thumbs up or a green tick if you can see why I've made that entry and the adjustment that it will make, and you're happy with it. Good, okay. The second entry then, adjustment to the NCI. Well, what's happening here is we've gone, the NCI, they put in as, what they put in as 14. We're putting it in a 17, so it's going to be 3. We're increasing the goodwill because this is, if this goes up, this 17 goes up, that's going to increase the goodwill. So we're debiting goodwill. It's creating more NCI. Well, we've seen a bit of this today when we did our transactions buying and selling. So we're crediting the NCI to increase it. So that is 3 of a difference, and that is going to increase the NCI. Okay, so don't think that one was particularly difficult. That was the adjustment to the NCI. For the fair value of the land bill, I think this is actually even easier because you could say, well, look, I need the land to go up. So it's going to be debit land with 5. So the credit is to Goodwill. Why is it a credit this time? Well, because that will reduce the Goodwill. Because remember, the net assets are subtracted in here. So if they go up by 5, you're subtracting more. That is going to reduce your Goodwill. Okay, are we happy with all of these journals? So give me a thumbs up or green tick if you are. Give me a question. Let me know which one it is you're not sure of. I can recap. We can clarify. Okay, lots of green ticks. Here we go. In the exam, could you just put down the total debit or credit for each instead? Yeah, you could. So as long as it's right, the only problem with that is that if you get one of them wrong, well, then you're probably going to get them all wrong. So you go the net. What's the net on Goodwill? So debit 7, credit 5. So the net is 2. So you'd be like debit Goodwill 2, debit Goodwill 2, debit land 5, credit provision 4, credit NCI 3. Yeah, you could do that. You're going to get all your marks. And don't forget as well, I put a little bit less than you would need here. You'd probably just need a little bit more to explain your journal, but not much more. They're focusing here mostly on the figures. But yeah, you could do it net. Right, okay. That's the first part. That's the first requirement. The second requirement here is